Welcome to Trading Nation. I'm Sara Eisen, joined now by Jonathan Golub, Chief U.S. Equity Strategist at Credit Suisse. Jonathan, good to see you.
Good to see you, Sarah.
So you've been pretty positive on this market. Are you disappointed with the lack of enthusiasm we've seen for what has been pretty solid earnings reports?
Yeah, it's really strange. I mean, we're seeing the best earnings season maybe ever, 25% year-over-year growth in the 9th year of recovery, and companies are beating by 8%. But the market's response to this is far more muted than normal. Typically, in an average earnings season, if you beat on both revenues and earnings, your stock price goes up by about 2%. And this time they're going up by half that amount, only about a 1% response, which isn't very much at all.
So what does that tell you about where we are and what the concerns are about this, about going forward?
Yeah, you know, what's interesting is there's a lot going on, and so investors, some are concerned about potential for rising inflation and rates. Others are concerned about regulatory issues related to the technology sector. I think the real story here, though, is that, you know, the earnings are so good, we don't really expect them to stay at this level forever, and therefore people are looking towards 2019 and saying, okay, what are they going to look like a year from now? And there's no question they're going to be a bit slower. And I think that investors aren't necessarily becoming negative, but really kind of grappling with, you know, how do you think about something that's this strong, but is probably going to be a bit weaker, still good, but weaker, you know, 6 months a year, really more in 2019 than it is today.
So how do you think ultimately that trend reverses if you're keeping your target higher from here?
You know, I think that ultimately this powers through. I think that ultimately, I mean, let's take a look at stocks. They started the year at a forward PE of 18. Today, they're a forward PE of 16. What we'll probably see in throughout this whole year is each quarter will deliver earnings growth of 20%. So stocks, if they don't rally, are going to get cheaper and cheaper. And then next year, while it may be a bit slower, we're still looking at something that's going to be, you know, at long-term averages, maybe even a little bit better. So I think that stocks will power through, and I think these other risks aren't going to play through as concerning a way as some might think. But for now, I think that the market's just trying to digest a fair number of cross headwinds.
Doesn't look like the Fed is eager to get too aggressive here. How important is the Fed policy for the remainder of the year going to be in determining how much this market can rally, if it can continue to rally?
You know, I'm generally a believer that we overemphasize the importance of the Fed as opposed to the economic backdrop and the earnings backdrop. If the Fed does 2 moves between now and the end of the year, I think the market will take a little bit of relief in that process. You know, one of the concerns people have is that the yield curve looks like it's beginning to flatten out a little bit more than people would think. And so if the Fed is, like you said, not in a rush and does 2 this year, I think that that's going to be good news for the market.
So why do you like financials?
You know, I think the story there is a couple of things. One, the underlying loan performance. And here you're talking about the ability of companies or individuals to make their loan payments is right now really high. So, you know, loan performance is great. Interest rates are expected to rise even if it's incrementally. And if the short end of the curve flattens out, you know, given where things are, it probably doesn't it doesn't hurt net interest margins particularly. So do I think that the banks are as exciting as they were a year ago when we started this process of doubling interest rates? No, I don't. But do I think that they'll still be an outperformer in the next year? Yeah, I do think they will.
You also like technology and consumer discretionary. So, I mean, pretty cyclical stuff where you expect this recovery to continue and the market rally to resume.
Yeah, you know, I think, though, if we kind of look at things on what do you like and then, you know, what's the confidence around those, the big table pounder is technology. Right now, this is a sector that's growing much faster than the market, has tons of cash on balance sheet, has a very high ROE, and because they've delivered so much in terms of earnings and so little in terms of price over the last few months, they're trading only a little bit more expensive than the market for a lot more growth. So that, to me, is the easy bet, if you will. And when I talk to hedge funds and mutual fund managers, I think that there's a lot of agreement. On discretionary, you really have half of the discretionary space, which looks like tech, and then a whole bunch that looks old economy, which is a little bit more probably challenged. So it's a little bit of a more bifurcated story on discretionary.
Finally, Jonathan, does the fact that the dollar has really broken out and started rising along with interest rates here give you pause on any of the multinational companies, the rally that we've seen in the Dow, for instance?
Yeah, it's a good question. Roughly speaking, every 7 to 10% move in the dollar is about a 1% change on S&P profits. So, for example, this last quarter, probably between 1 and 1.5% of this great earnings growth was solely due to the dollar. So, is it a little bit more of a headwind? Absolutely, but it's so far it's a recent event. It's still reasonably modest. So we're not anywhere near trouble territory. But if it rallies a ton from here, obviously that would change.
Jonathan Golub, always good to talk to you. Thank you.
Thanks, Sarah.
Of Credit Suisse. And thank you for watching Trading Nation. I'm Sara Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.